thank you guys so much for tuning into today's live stream. It is June 17th, 2025, and to begin today's live stream, I do want to take a look at the economic calendar here. So for June 17th, we have G7 meetings. The two things that are red are core retail sales month over month and retail sales month over month. Core retail sales measures it's the primary gauge of consumer spending, which accounts for the majority of overall economic activity. Let me see what ChatGPT has to say about this. So ChatGPT says core retail sales is the measure month over month is the monthly change in the total value of retail sales, excluding automobiles, which are volatile and can distort trends. Negative 3%. Retail sales fell 3%, and that's expected it to be at 2% or 20%. 20 basis points increase. So it's about consumers. Oh, it's consumer spending. Yeah, okay. Yeah, it's actually down. Forecasted was 20 basis points. What we actually got was a negative 30 basis points contraction. And that's core retail sales. So that's excluding any automobiles and retail sales. Month over month is actually a negative 90 basis points. Forecasted was a negative 50 basis points. So this information is almost deflationary, right? It's essentially telling us that consumers aren't spending as much. Yeah, consumers are spending less. And yeah, so it could actually push the Federal Reserve to cut interest rates, to inject liquidity, to make it easier for consumers to borrow, to kind of stimulate growth. But yeah, so these numbers are deflationary. Some of the news that we have, high capacity utilization rate. I'm very too interested, but yeah, tomorrow just keep in mind that we do have unemployment claims and FOMC, which is kind of like the main takeaway from this week is that, yeah, FOMC is this week on Wednesday. Going to the technicals here for today. This is the daily candle here, previous daily candle, and with the way that we closed here previously on the daily candle, I can anticipate that we are most likely going to take out the daily high. So my best, or I guess my bias coming into today would be for us to take out the daily high. However, I need to, if that's the higher time frame objective, right? That's the higher time frame order flow. if it's on a daily time frame, then I have to use the intraday time frames to align myself with that order flow, right? So even though I have a clear kind of a clear bias, I can't force anything to happen. I can't force anything unless the intraday candles are telling me to do so, right? So what do I mean by intraday candles? Well, the intraday time frames could be, the 4 hour, could be the 6 hour, could be the 8 hour, could be the 10 hour. I'm waiting for one of those time frames to support the idea of lower prices, right? The 10 hour, or not lower prices, sorry, higher prices. I'm waiting for the 10 hour, the 8 hour, the 6 hour, the 4 hour to create a bullish candle that is in alignment with the bearish order, with the bullish order flow on the daily time frame. And so coming into the morning, I would have liked to utilize the intraday time frames. So depending on how the 4 hour candle closes and the 8 hour candle closes will give me a morning objective. It will give me a bias, right? Every single candle has a objective. And all I'm waiting for is this candle to close and this 8 hour candle to close. So once those two candle closes, I will have a objective, right? For right now, I can't force anything to happen on the daily time frame because I don't have a model. But once the intraday time frames suggests that we are most likely going to take out the daily high, then I'll consider doing so. But for right now, just chilling. Not really forcing anything to happen here. There was this setup here in the London session where prices actually, there was a pretty clean setup, right? And I believe it was right here. So I didn't take this. I was sleeping at the time. But let's take a look at the 4 hour candle here. So actually, the backtrack. Let's take a look at the 10 hour candle. So this is the 10 hour candle here, right? And based on the way that we closed here on this 10 hour candle, it appears to me that we are most likely going to take out the 10 hour low, which means that I, for the next 10 hours, am going to be bearish until we take out that 10 hour low, right? And so seeing the way that we close bearish, right, I am now favoring the sell side delivery. I want to see prices take out the 10 hour low. And so going from the 10 hour time frame, I notice that this 4 hour candle here suggests that we are most likely also going to take out the 4 hour candle low. So the 10 hour candle or the 10 hour order flow is bearish. We want to see lower prices. The 4 hour order flow also bearish. Notice how we rebalance into this 4 hour fair value gap, this 4 hour SIBI to be more exact, and we respect it. We respect the 4 hour SIBI, and then we created a bearish 4 hour candle. With this, that gives me this idea that we are most likely going to take out the 4 hour candle low. So I'm bearish for both the 10 hour and the 4 hour. So going on to the 1 hour time frame, I noticed that we created this bearish hourly candle here. So everything here, all of these time frames that I'm using is bearish. It's telling me that we are most likely going to continue lower. So this hourly candle, I get the idea that we are most likely going to attack the 1 hour low. And so knowing that we should probably take out this hourly low, that becomes my higher time frame objective for this trade, right? Notice how the 4 hour candle, the 10 hour candle, I didn't have a model to, I guess, align myself with the higher time frame order flow. So instead of using the 4 hour and the 10 hour as my higher time frame order flow, I treat the hourly time frame as my higher time frame objective. And the way that I align myself with this order flow is using the 15-minute/30-minute model. So notice how this 30-minute candle here and this 15-minute candle here suggests the idea of lower prices, right? We should take out the 30-minute low, and the 15-minute low is the same low as the 30-minute low, which is that green line right there. And so with that in mind, like I said, we should take out the 15-minute low and expand lower towards the hourly low. And after we take out the hourly low, where else could our targets be? The 4 hour low. After we take out the 4 hour low, what should we do? Take out the 10 hour low. So here I'll draw out some lines. So this, I would denote that as 4 hour low, because that's the draw of liquidity, right? It's on the 4 hour time frame, it's bearish. And so and this is the 10 hour low. All right, and so let me draw out the hourly low. So all of these time frames are telling us the same story. 1 hour low. All right, so going on to the 15-minute time frame, or I guess going from the 15-minute but onto the sub 5-minute time frames, I noticed that there is this 3-minute fair value gap. And this 3-minute fair value gap here that we create is going to be treated as my entry pattern to continue lower, right? We should rebalance into this fair value gap, respect it, and then continue lower towards the hourly low. Take out the hourly low. After we take out the hourly low, we should make a run for the 4 hour low. After we take out the 4 hour low, we should make a run towards the 10 hour low. Something kind of like this. That's kind of what I am anticipating here, based on the 15-minute time frame, the 30-minute time frame, the hourly time frame, the 4 hour time frame, and the 10 hour time frame. So I'm piecing all of these, I'm piecing everything together here. So using the 3-minute fair value gap, you'll notice that that's the entry pattern here. And let's see what happens. So prices rebalances into we rebalance into the 3-minute fair value gap, which is, I'll make this a little bit easier to see, but we rebalance into this 3-minute fair value gap. We respect the fair value gap, and then we expand towards the 30-minute low, which I should have noted out, the 30-minute/15-minute low, which was the model's objective, right? So there is the 15-minute low, and then we take out the hourly low. After we take out the hourly low, we expand it towards the 4 hour low, and then after taking out the 4 hour low, we expand it towards the 10 hour low. This right here would have been a 4.6 1 to 4.67 risk to reward. This would have been a really good execution, right? Everything is in alignment with one another. It's like, instead of having because usually I have only a higher time frame objective in a model, but this specific like setup almost allows for like so 10 hour, 4 hour, 1 hour, almost 4 time frames are telling us the same story. 4 time frames, and they're all completely different like objectives. Notice how the 15-minute low is different from the hourly low. Notice how that hourly low is different from the 4-hour low, and notice how the 4-hour low is different than the 10-hour low. All of those lows are different, meaning that we should continue to expand lower towards each one of those lows after taking out the previous low, if that makes sense. Yeah, this is a really clean setup, right? We had the entry pattern, we had a model, and we have a higher time frame objective. We so happen to have 2 other time frames higher than our higher time frame objective. That suggests the same order flow, which is like, I don't really see that happen a lot, but very interesting, right? And so coming into the morning today, what is my best approach here for the morning? I think my best approach here, to be honest, is, like I said, probably to wait for the 4-hour candle to close and to wait for the 8-hour candle to close. So depending on how those 2 candles close, that will give me a bias, right? Because every single candle, like I just showed you guys, has an objective. There's always a reasoning for something. And here, once those 2 candles close, that will give us a reasoning for either higher or lower. Or sometimes you just don't know where prices wants to go, and if you don't know where prices wants to go, then you just sit on your hands, right? You don't have to force anything to happen. That's like one of the first things that I had to kind of learn, was that there are going to be days where you just don't do anything, and that's completely fine, right? You don't have to force anything to happen. And yeah, that's pretty much how I'm approaching today. We have 10 minutes left, so I'll try to knock out the pros and cons here in 10 minutes, and then be live for the 10 o'clock open. But yeah, hopefully that was good clarification of how I kind of view prices, right, and how I approach things. But yeah, that was a really clean setup that we had overnight. Whenever I was like scanning through what happened over the night, I noticed that setup, and I was like, wow, I need to mention this to you guys. I've never had a setup where there were 4 factors for a continuation lower or higher. That's the first time. Even though it looks like a lot of consolidation, right? Even though this like whole thing right here looks like consolidation, as long as you know what the objective is, then you should be fine. Notice how whenever I'm taking this short, I understand that we're not targeting the previous day low. Is like targeting previous day low here is out of the picture. It's not within the same setup, which, you know, it's not within the range of my objective, right? The objective was, maximum wise, was probably the 10-hour low. There's no component to the setup that suggests the idea that we should take out the previous day low. I know there were times, maybe back whenever I first started, where I was using 1 minute structure, right? I was using this 1 minute time frame to target like monthly lows, which makes no sense, right? The amount of range that a 1 minute candle has, or amount of time that the amount of time that a 1 minute candle has to create is completely different than how much time a 1 month candle has to create. The monthly candles range is going to be like exponentially greater than how much range a 1 minute candle has, which is why those two time frames don't really, it's not that they don't have correlation, but it's like trying to feed 1,000 mouths with just one loaf of bread, right? That's not efficient. You would need 1,000 loaves of bread to be able to do that. But enough of this. Let's start with the pros and cons. So some of the pros and cons that I can carry into this week is to remain consistent, right? So notice how whenever I was going over that setup with you guys, I was able to identify 3 key components to that setup, which is the higher time frame objective, a model, and an entry pattern. Those 3 things should always be present before I press the button, right? Being able to identify those 3 things allows me to be consistent, and it allows me to really follow the rules that I've set for myself. Not even rules, but it's more of like my entire strategy, right? If one of those things aren't present, then if I execute, that's not even me executing my strategy. My strategy demands those 3 things: the higher time frame objective, a model, entry pattern. It's very simple. Second, to utilize a model to align myself with the higher time frame order flow. So notice how whenever I was going over that setup with you guys, the model was the 30-minute / 15-minute power of 3. The higher time frame order flow was the hourly candle. The hourly candle was suggesting lower prices already, right? But the way that I aligned myself with that order flow was based off of the 15-minute / 30-minute time frame. If I didn't have a model, then there's no reason for me to force anything. Sometimes you'll kind of have a good idea of where prices wants to go, but if you can't align yourself with that range that you're targeting, then you just don't do anything. Third, you want to pay close attention to SMT. So here, before I started all of this, I took a look at ES and NQ, and I realized that we don't have any SMTs, right? ES, we took out this relative low right here. NQ, we also took out that low here as well. So us having no SMTs kind of suggests the idea of lower prices, but at the same time, we also don't have SMTs at the highs. So that's kind of interesting, but yeah. So utilize SMT before and during the trade. And the last thing here is, like I said, you don't really have to force anything to happen. If there is no setup, if your components aren't there, if there's no entry pattern, you just don't force anything. And this is really, like I've gotten a lot better at doing this, but whenever I'm trading with my personal capital, it is a little bit different than trading with a funded account for sure. It's like I really have to strengthen my mindset and my mental, right? Psychology has to be 100% there. If it's not there, then I'm not going to be able to execute. And yeah, so that's basically all the pros and cons. Here it's just some of the risk to rewards that I have set for myself here. Yeah, so improvements, summary of the pros and cons. Take consistent trades. require 3 components before you execute. It's like the thing that I ask myself before I even press the button is, if someone were to ask me why I took this, can I explain to them in a very elementary like way, right? And I can. If I can identify these 3 things and if I can explain to them these 3 things here, then I should be able to take the trade. If I can't identify these 3 things, then I shouldn't take it at all. Second, utilize SMT. Second or third, know when to pivot. So pivoting is like whenever a time frame completes its objective, or if you just don't know what a time frame wants to do, if you don't know what the objective is, then you have to go on to a different time frame. That's kind of what pivoting is, right? Utilizing all of the time frames to your advantage. That's like me. I know that today the daily candle is, or I guess the previous daily candle closed bullish, and so coming into today I should be bullish as well. But the fact that the intraday time frames, such as the 4-hour, 6-hour, and 8-hour, isn't really suggesting the idea of higher prices, this kind of negates the whole idea of it doesn't negate the idea, but this kind of prevents me from utilizing the daily time frame, right? But yeah, just know when to pivot. Utilize all of the time frames to your advantage. And fourth, don't force any trades, but at the same time, don't be hesitant to execute. Whenever you have all of your components in play, whenever everything is telling you that you should execute, don't hesitate. Just click the button, and you shouldn't really see anything else besides executing, right? You shouldn't worry about if it's going to be a loss or a winner. Just execute. And yeah, with that, that's pretty much all for me today. All of the pros and cons. Notice how with the way that we are closing here on the 8-hour time frame and the 4-hour time frame suggests the idea of higher prices. So 4-hour candle, 8-hour candle is suggesting higher prices. Hourly time frame is also suggesting the same idea. And yeah, so for me, my best bet coming into the morning today is that we should take out the 4-hour high. And yeah, that's how I would kind of approach today, right? And there is that. So there's us taking out the 4-hour high, right? It's a very simple approach. There's not much to it. The way that we closed here on the 4-hour candle was bullish. If you want to break it down even more, the 4-hour candle, the blue line, the blue line is the 4-hour candle closure. I'm gonna make the 4-hour high as the green line, and I'm gonna make the 4-hour low as a red line. So objectively looking at it, right? This allows for no subjectivity. Is the blue line closer to the green line, or is the blue line closer to the red line? Well, the blue line is closer to the green line. And that means we should most likely take out the 4-hour high, because the green line equals the 4-hour high. It's a very, it's super basic. It's very simple, right? But the reason why I didn't execute is because I didn't have a model. Notice my 15-minute time frame suggests the idea of higher prices, and it suggests that we should take out the 15-minute high and expand towards the 30-minute / hourly / 4-hour high, because the way the reason why I'm saying slash is because the 30-minute high is the same high as the 4-hour high. But yeah, I mean, I guess I had a model, but I didn't have a entry pattern. That's to be correct. So you guys, if you guys were kind of watching where I was like setting up almost a trade there was a possible setup if prices were to allow me to retrace back into this inefficiency. But the fact that we didn't means that there was no setup. And yeah, I mean, not no setup, but there's no entry pattern. And yeah, so I think that's going to be pretty much it for today. I don't necessarily have anything else for me to cover here. Yeah, that's going to be all for today. Thank you guys so much for tuning into today's live stream. Until tomorrow. Tomorrow's going to be FOMC, so I'm going to be on the charts for sure. But yeah, thank you guys so much for watching it or tuning in. And until next time.